our market monitor on this Friday says the stock market in the new year will continue to, quote, surprise investors, and in a good way. She's Dianne Jaffe, senior portfolio manager at TCW, an asset management firm with $130 billion under management. Dianne, welcome. Good to have you with us. So why are you confident that the market can continue to move higher from here? And are you concerned that history suggests that when there's a switch in the chairman of the Fed, C. Bernanke, C. Greenspan, Allen, there is often a crisis that comes quite soon on the heels of that?
I think you make excellent points, but don't forget that Janet Yellen's been the vice chair under Bernanke, and they're sort of the team that's been putting this whole quantitative easing process in effect, and I think that we'll have a very smooth transition. In terms of the market, I think people are still generally nervous about, having risen so much, is there more to come? And we think that with earnings growth, and remember they're coincident economic indicators, right? They're not looking forward at all. It's what the company's earning today is really going to bolster the market going forward in 2014.
Now, you're going to be talking about a couple of your stocks, and you like the financials. You have a couple of them to suggest. Let's start with State Street. Tell us why that you like this regional firm, and also it's had such a nice move on its stock, as you can see in this chart here. Is there still room to grow if an investor puts new money in now?
We think so. The cost cutting has really done a good job. There are over $400 million cumulatively to date. Their technology is data mining, giving good services to their customers. And so we do believe that it's got 10 to 15% more upside over the next year. And
a lot of their business, of course, in asset management and trust services, I suppose. Now, let's move on to Citigroup, which is another of your choices. I'm curious as to why Citigroup above some of the other choices in the big bank world.
Well, they've they're trading below book value. So when people say, is there still value in the market, I point to names like Citi, because you can still buy it below book value. They pay a subpar dividend because they're waiting for the 2014 CCAR process to go through. And in the meantime, they've been accumulating all their capital requirements for the regulators. So they should be very well situated in the next year's review. And that means that they should be able to return cash to shareholders in the form of increased dividends.
Dianne, you have General Electric as another one of your picks, and we just reported a moment ago that they are increasing their dividend by 16%. I'm sure that's going to make a lot of investors happy. But when you look at this stock over this past year, even after this past decade, it's always been somewhat in this mid-$20 range. Why should investors buy this stock?
Because they're finally figuring out how to separate the industrial healthcare business from the GE Capital. And, the target is to be 70% industrials and only 30% GE Capital. And they're making good there. GE Capital has been dividending up to the parent company billions of dollars. And now we're seeing it return to the shareholders in the form of a dividend. They have the highest dividend yield in the industrial group right now.
Your final choice is Pfizer. They've gone through some very tough years. You see them coming out of the woods. How much higher do you think they could be a year from now than they are today?
We do conservatively see at least 20% upside. They have the most improved pipeline of their peer group after the Lipitor, fell off the cliff. And they've done a good job in terms of selling off their nutritionals business, rolling out their animal health business, Oitis. And, now they're starting to plan the financials for the innovative branded companies versus the generic. So there still could be more restructuring to come.
All right, Dianne, do you have any disclosures with respect to any of the stocks that you mentioned there, State, Citi, GE, or Pfizer?
I'm a shareholder in the fund, and in all my funds, and we own those stocks.
So we like that you put your money where your picks are. Dianne Jaffe, thank you very much for joining us. Have a happy holiday.
You too. Thank you.
Dianne, Senior Portfolio Manager at TCW.